Welcome back to Charged Alpha. I'm Hudson Thomas, joined as always by my co-host Lana Chen. In this segment, we're zooming out from the quarterly noise for a full company chapter.
That's right, Hudson. Before we dig into the latest earnings, let's make sure we actually understand this business, what it does, how it makes money, and what makes it competitively distinct.
CEO Aman Bhutani joined in 2019 from Booking Holdings. He has shifted GoDaddy from pure domain and hosting toward a bundled small business commerce platform with payments and marketing tools.
The customer base of approximately 21 million is almost entirely small businesses, entrepreneurs, freelancers, and local companies establishing or managing their web presence and digital business identity.
CEO Aman Bhutani joined in 2019 from Booking Holdings, where he led digital product development. He has shifted GoDaddy's strategy from pure domain and hosting toward a bundled small business commerce platform.
GoDaddy Payments is the most strategically important growth initiative. When small businesses process transactions on GoDaddy-hosted sites, the company earns a take rate on every dollar transacted.
The applications and commerce segment generates about $1.5 billion. It includes the website builder, professional email, GoDaddy Payments, and marketing tools targeted at small business owners.
GoDaddy Payments is the most strategically important growth initiative. When small businesses process transactions on websites hosted by GoDaddy, the company earns a take rate on every dollar of commerce transacted.
Payments' gross payment volume has been growing rapidly. The more businesses use GoDaddy Payments to process customers, the more GoDaddy captures a second durable recurring revenue stream on top of hosting fees.
Gross margin sits around 65% and adjusted EBITDA margin around 30%. Strong metrics reflecting the software economics of domain registration and website hosting infrastructure at large scale.
The competitive landscape includes Wix and Squarespace on website building and Namecheap on domains. Neither matches GoDaddy combined scale across domains and small business application tools.
GoDaddy's Super Bowl advertising campaigns from 2005 onward established remarkable brand awareness among small business owners, giving it a customer acquisition cost advantage over newer competitors in the market.
The competitive landscape includes Wix and Squarespace on website building and Namecheap on pure domain registration. Neither matches GoDaddy's combined scale across domains and small business application tools.
The risk is market maturation. New domain registrations are not growing rapidly as the internet matures, so growth must come from raising average revenue per user through payments and application product upsells.
ARPU growth of roughly 5% per year is the primary mechanism. Each new payments feature or commerce tool makes the existing customer base incrementally more valuable over a multi-year customer lifetime.
For technology investors, GoDaddy offers a durable small business platform, high renewal rates, growing payments attach, and a management team executing a clear evolution from domain registrar to full commerce ecosystem. GoDaddy processes over $40 billion in annualized payments volume, a figure that has been growing rapidly as the company deepens its commerce capabilities and adds new small business financial tools.
That's the company chapter for GoDaddy. Now that we've got the full picture, let's get into the earnings.
Time to dig into the numbers. Let's go.
GoDaddy just delivered a Q1 2026 earnings beat. EPS of 160 versus the 153 estimate, a 4.6% beat. Revenue of $1.26 billion matched estimates exactly. GoDaddy has been transforming from a domain registrar into an AI-powered commerce platform for small businesses. This beat shows the transformation is clearly gaining traction. This is Charged Alpha. Let's break it down.
GoDaddy is the largest web hosting and domain registrar in the world, serving more than 20 million customers globally. The business has evolved dramatically over the past 5 years from a domain sales company into a small business commerce platform, offering website builders, online stores, email marketing, payments, and now AI-powered tools for entrepreneurs. Market cap is approximately $11.6 billion.
The strategic pivot CEO Aman Bhutani has driven is toward high-value subscriptions and commerce tools. Domain registration is now largely a customer acquisition channel. The real revenue comes from recurring application subscriptions and the growing payments business. GoDaddy serves 5,500 employees globally and processes transactions for millions of small business storefronts. The shift toward commerce and AI tools is the core investment thesis.
Q1 2026 revenue was $1.263 billion, exactly matching estimates. EPS of $1.60 beat the $1.53 consensus by 4.6%. The beat came from margin expansion in the Applications and Commerce segment, which carries higher margins than domain registration. Revenue growth continues in the 8% range year over year.
Trailing 12-month revenue is $4.95 billion, up 8.3% from the prior year. Net income for the TTM was $875 million. The net margin expansion story has been significant. GoDaddy has shifted from a low-margin registrar to a platform business, generating substantially higher returns on revenue. Operating leverage is the key financial narrative.
Free cash flow is exceptional. Trailing 12-month operating cash flow was $1.599 billion, an extraordinary 32% free cash flow margin on revenues. Capital expenditures are minimal at just $24 million TTM. The asset-light subscription-driven model generates cash at a rate that rivals the best software companies. GoDaddy has been aggressively returning that cash through share buybacks.
Balance sheet: $1.081 billion in cash against $3.86 billion in total debt. Net debt is approximately $2.8 billion. Equity is just $215 million. The book value is negligible because years of share buybacks have retired equity. Total assets are $8.0 billion. The high leverage is a deliberate capital structure choice, funded by strong free cash flow generation.
The share buyback program has been substantial. GoDaddy has retired massive amounts of stock over the past several years, which is why book equity is near zero despite strong profitability. The buyback concentration amplifies per-share earnings growth beyond what revenue growth alone would suggest. At the current pace of buybacks, share count continues to decline meaningfully each year.
GoDaddy pays no dividend. All excess cash goes to buybacks, which the company believes is the highest return use of capital given the consistent trading discount to intrinsic value. The PE of 28.9 times trailing earnings reflects the market's recognition of the earnings power, but uncertainty about the pace of the AI commerce transformation and the sustainability of the margin profile.
Analyst consensus on GoDaddy is hold, with an average price target of $207, about 12% above the current price. The hold consensus reflects uncertainty about the long-term revenue ceiling. GoDaddy's total addressable market is clear. Hundreds of millions of small businesses globally need an online presence. But monetization of that base beyond domain and hosting has historically been slower than management targets.
The AI narrative is the wild card. GoDaddy has been aggressive in deploying generative AI tools for small businesses, automated website creation, marketing copy, customer service chatbots. These tools aim to increase the value proposition enough to justify meaningfully higher subscription pricing. If AI tools drive average revenue per user up by 30 to 50%, the revenue ceiling thesis changes significantly.
Valuation at 28 times earnings prices in some AI and commerce acceleration. Bulls argue GoDaddy deserves a SaaS-style multiple given the recurring subscription revenue and high free cash flow conversion. Bears argue 28 times is expensive for a business growing revenue at 8% and serving the highly price-sensitive small business market.
The payments and commerce segment is the swing factor. GoDaddy processes payments for small business storefronts. As that merchant base grows and average transaction volumes increase, the payments take rate revenue compounds. If GoDaddy becomes a meaningful player in SMB payments alongside Shopify and Square, the addressable market expands and the multiple looks cheap in retrospect.
Near term, the Q1 beat removes a key overhang. Analysts who were modeling execution risk on the AI transformation have been at least partially reassured by Q1 margins. Full year 2026 guidance implies continued 8+% revenue growth and further margin expansion. If the company delivers, the stock has clear upside to the 207 target.
The bull case is the global small business digital commerce opportunity. GoDaddy has a brand, a customer base of 20 plus million, and established relationships across the small business stack. As AI dramatically lowers the cost of building and operating an online business, GoDaddy is positioned as the all-in-one platform for entrepreneurs who need a digital presence, payments, and marketing automation.
Free cash flow compounding is the financial engine. At $1.6 billion in annual FCF on a declining share count, each share represents more cash flow each year. The buyback effectively creates a leveraged return. If GoDaddy deploys cash buybacks at a discount to intrinsic value per share grows faster than earnings per share. That compounding mechanic is extremely powerful.
International expansion is the third lever. GoDaddy is heavily US-weighted. Emerging market small business digitization, India, Southeast Asia, Latin America, represents a massive untapped opportunity where GoDaddy's domain and hosting infrastructure has established positions. If international average revenue per user moves toward US levels, total addressable market doubles or triples from current levels.
The bear case is small business churn risk. Small businesses fail at high rates. Half don't survive 5 years. That creates structural churn in GoDaddy's customer base that requires new customer acquisition to replace. If macro conditions pressure small business formation, high rates, weak consumer spending, GoDaddy's new customer growth slows and churn becomes a net headwind.
Competition from Shopify, Squarespace, Wix, and now AI-native website builders threatens GoDaddy's market share in the higher-value commerce segment. GoDaddy's brand is strongest in domain registration and basic hosting. The market it now needs to move upmarket into is contested. Shopify has a commanding lead in e-commerce functionality for serious merchants.
Leverage risk is real. $3.8 billion in debt on a $215 million equity base means the balance sheet depends entirely on the continued generation of strong free cash flow. If a major platform disruption, Google changing search algorithms, a competitor offering free website tools, compressed margins materially, the debt load would become more concerning. The buyback-heavy capital structure amplifies both upside and downside.
Pricing power in the small business market is limited. GoDaddy's core customers, micro businesses, and individual entrepreneurs are highly price sensitive. Price increases drive churn. The AI value add needs to justify meaningfully higher subscription prices without triggering customer defection to free or freemium alternatives. That balance is the ongoing management challenge.
GoDaddy's most direct peer is Web.com, which operates in the same domain and web hosting space but at smaller scale. In the broader small business platform market, Shopify is the dominant e-commerce competitor at a dramatically higher multiple. Shopify trades at roughly 10 times revenue versus GoDaddy's 2.8 times, reflecting Shopify's faster growth and international traction.
Wix and Squarespace are the website builder competitors. Both operate at lower scale than GoDaddy, but with stronger product reputations in design-focused website creation. Wix trades at a premium revenue multiple despite slower growth, reflecting its loyal customer base among creatives. Squarespace went private in 2024, removing it as a direct public market comparison.
In payments, GoDaddy competes with Stripe, Square, and PayPal for small business transaction processing. These are much larger competitors with deeper payment ecosystems. GoDaddy's advantage is bundling payments with website and domain, reducing friction for customers who want a single vendor relationship. The cross-sell opportunity is real, but conversion from domain-only to full-stack commerce customer takes time.
What differentiates GoDaddy is scale and brand recognition in the domain and hosting layer, the foundation of small business online presence. No competitor has GoDaddy's customer count or brand penetration in the micro-business segment. The question is whether that installed base can be converted into higher-value commerce relationships at the pace management is targeting.
Options activity around GoDaddy's Q1 earnings was moderate. Implied volatility was elevated heading into the print, pricing roughly a 5 to 7% move. The actual earnings reaction was within that range. Put-call ratio was slightly skewed toward calls, reflecting the market's anticipation of the AI transformation narrative delivering positive results, which Q1 partially validated.
Longer-dated options show call interest clustered around the 220 to 240 strike for second half 2026. That's an aggressive bet on GoDaddy re-rating toward its prior highs. Put open interest focuses on the 170 strike, protecting against a scenario where AI monetization disappoints or SMB spending weakens. The options market is pricing a wide range of outcomes.
Insider activity has been limited in recent periods. CEO Aman Bhutani holds equity through compensation grants and has been a seller in prior periods at significantly higher prices. The absence of insider buying near current levels may reflect trading window restrictions rather than a negative signal. But it's worth noting that management hasn't stepped in to buy the dip publicly.
Institutional ownership is concentrated in growth and technology-focused funds. Large holders include major index funds alongside active managers who believe in the SMB platform transition. GoDaddy's combination of high free cash flow yield and visible growth makes it attractive to both value-oriented FCF investors and growth investors focused on the commerce transformation narrative. Institutional sentiment has been constructive heading into 2026.
Bottom line on GoDaddy, the AI and commerce transformation is showing early traction. The Q1 beat came from margin expansion, and free cash flow is exceptional. The small business churn risk and leverage are real constraints.
At 29 times earnings, the market is pricing in execution on the platform transformation. Charged Alpha rates this a hold. Strong FCF, compelling transformation thesis, but pricing leaves limited room for disappointment. Watch AI monetization metrics in Q2.
Financial data and charts sourced from Financial Modeling Prep. Charged Alpha is for informational and educational purposes only. This is not investment advice. Always do your own research before making investment decisions. Thanks for listening to Charged Alpha. Subscribe and leave a review if this was useful. New episodes every earnings season. See you on the next one.
Ooh-wee-doo! That ticker tape starts dancing fast. A bull market thrill that's built to last. Dividends are ringing up the swing. Listen to that sweet ka-ching. It's a Wall Street swing. That fast-paced rhythm makes you sing. Yeah, the Wall Street